Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you wouldn't mind, please make sure to interact with today's stream as much as possible to help us get in the algorithm and help us push us to new people that want to learn about crypto. The more people we educate about crypto, the more we will see entering the markets and the greater success we will all have. We all want to see adoption of cryptocurrency right now, and teaching people and pushing our live streams to new people is really going to help with that. So please don't forget to like today's stream. Let's take a look at what we are going to be looking at today, because we've got a lot to discuss, to be perfectly honest. We're going to be taking a look at these spot Bitcoin ETFs. We've got some really positive news articles about them, and we have some pretty concerning articles about them as well. We're looking at, will these ETFs fail? Well, that's what's being said in the news today. So we will discuss these articles today, and then we'll take a look at the possibility of an Ethereum ETF. Once again, this is creating excitement in the market. A lot of people are choosing to try and front run an Ethereum ETF with some anticipation that we may see some as soon as May. And we are looking at some other cryptocurrency news where we talk about mining. We're taking a look NFTs. We've got a load of news to discuss today, so please don't forget to like, subscribe, and hit that bell notification button. Let's take a look at what's going on with the price of Bitcoin now. It's all looking a little bit red. It's all looking a little bit gloomy. Thankfully, the snow and the ice has kind of disappeared in the UK. The weather's looking a little bit warmer, but the cryptocurrency industry is still looking very cold. It's all looking very red. If we take a look here, you can see Bitcoin is down 2.34% to $40,785, down 4% within the last week, and Ethereum is down even further, down almost 4% there, down 6% in the last week. Now, if we just scroll down here, you can see we're in a sea of red right now. Avalanche is down 6%. We've got Chainlink and Polkadot down over 4%. What else have we got here? Cardano down almost 5%. Dogecoin over 5%, and Avalanche down over 6% as well. So we are seeing some really negative volatility in the markets right now. In terms of biggest losers of the day, we've got Chili's down almost 12% there. And in terms of biggest gainers, we're looking at 2 or 3% there for Loopring and Huobi's token HT. So we are seeing volatility in the markets right now. It is looking a little bit doom and gloom. Let's take a look at the CME gap before we start today's stream. So what we can see here for the Bitcoin prices, we have seen some movements to the downside. In fact, let's pull the CME gap up first. So let's create a new tab here, and let's go to, if you go to TradingView, if you ever want to check this out, and you type in BTC1 ! This is the CME chart. Now this is from the Chicago Mercantile Exchange. They are the world's largest derivatives exchange, and they are operational every Monday to Friday. When they close on a Friday, they do not the price of Bitcoin is not tracked. So what happens is they'll put the candle there on the Friday, and then when they close, they will not put anything on this chart until the Monday, and the price will just start from where the price is on the Monday morning when they open. Now, why is this important? Well, when there's a CME gap, which is the gap between the close on the Friday and the opening on the Monday, that acts like a magnet for the Bitcoin price until it is filled. Now, to fill a CME gap, we want to see price action within that range. So right now, we have a CME gap, which is down at $39,630. And this is from the first weekend in December. Now, we do have another CME gap to be aware of that we should discuss while we are here. So this is down at $20,000. This is from back in March 2023. We don't necessarily have to fill them. They do just act like magnets for the Bitcoin price. Now, right now, we didn't create a CME gap this weekend. We've had volatility there, and it's kind of closed anything that we were going to see. Friday, we closed the markets up at $41,600, and we basically opened at the same point today. So no CME gap this weekend, but we do need to be aware of that $39,630 level that is acting like a magnet for the Bitcoin price right now. If we put that on the chart here at $39,600-ish, there you can see that is the CME gap that we are looking at right now. And if we also, which we have been doing quite a lot here on these streams, pull up the Bitcoin liquidation heat map, we can get a little sense of what's going on when it comes to traders right now. So let's pull this into the stream here. What we can see here today is, if it loads, we'll be able to find out where traders' pain points are, essentially. So Bitcoin takes the path of most pain very frequently. It likes to liquidate as many traders as possible. Now, this chart here shows us where the key points of liquidation are. So it's saying right now, if the price of Bitcoin were to move up to $42,000, we could see a load of people getting liquidated. Now, that'll be because there's a huge amount of people in short positions right now. We are seeing the same pattern start to emerge at $40,000 there. We could be seeing huge amount of long positions having their liquidation points at around that range. So these are also, to me, acting like magnets for the Bitcoin price. If we zoom out a little bit further, we'll be able to take a look at some more key points here. So we are looking at those higher levels as being the liquidation points here. It seems people are entering short positions right now because the markets are looking a little bit doom and gloom, and everybody is being a little bit more pessimistic than they usually have been within this kind of last couple of weeks. So let's take a look at the Bitcoin chart here and see what's been going on. Please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. I've got a hair on my face and I cannot get it off. There we go. What we've got here is on the weekly chart, on the daily chart, first of all, if we take a look at this, we have a key level of support here. Now, we did discuss this on Friday. This is at $41,240. Now, if we see a daily candle close below that price point, we have broken that level of support, and maybe that is an indication that we are in for lower prices. When we break that level of support, that really means that we could be looking down at, for example, we can pull up loads of levels of support here. First of all, we have that $39,600 CME gap. We also have some previous levels of resistance. I think this is a really key point here at $37,840. But we could also be looking down at that lower 30s range. So this $31,500 level was a really key level of support that we were all discussing back at this period of time here in July 2023. And this is a really crucial level. Now, do I think we're going to go that low? It's questionable right now. I'm hoping this support holds at $41,200, but if it doesn't, I think this range is most likely. I think coming down to here, it's possible. I wouldn't rule it out completely. I wouldn't rule it out as much as I'm ruling out that $20,000 CME gap, but I'm saying it's less likely. What we see in a Bitcoin bull market is we do typically see 20-30% pullbacks. If we take a look at the high that we've seen this past couple of weeks and we pull that down to here, that's a 36% pullback to that level of previous resistance. That's a little bit too much, in my opinion, for the state of the markets right now, where I believe we are in the 4-year cycles, but it is possible, and it's in that range. I'm looking at 20-30% declines being pretty normal. I think that 22-23% drop to $37,840 would fit the pattern perfectly. The pattern is that we are in a bull market, it's expected, and we should see 20-30% pullbacks pretty frequently. I mean, every couple of months. So seeing a 23% pullback right now would fit the trend. It would fit the pattern that we've seen before. So this, to me, is a likely scenario that we could be seeing if this current support doesn't hold. This, to me, is, yes, it's 36%. It's not crucial. It's not something that I would go, oh my gosh, what is happening to the markets here? This is nothing we've never seen anything like this before. I would say it fits in with the trend, but it is a little bit too extreme to be 100% banking on right now. So this is what I'm looking at here. I'm looking at the $37,840 level as the kind of key point for me to be keeping an eye on. But it all depends on if we do break through this level of support. We need to wait and see what's going to happen here. If we manage to close today's daily candle back above that $41,230 level, we don't need to have too many concerns looking at these levels of support yet. We need to kind of play it as it goes. If we break the level of support, what support do we have below it? But until then, we need to be looking in both directions. So if we zoom in on the 4-hour chart here, you can see that we do have some pretty strong buying power within this range. We've seen over and over again, big wicks going to the downside, but those getting bought up extremely quickly on the 4-hour chart. And if you go in on the 1-hour chart, you can see the same sort of response from the markets. So this has been a key accumulation level in the past, and hopefully it continues to be. What we can see here is we do have some key levels of resistance that we could be paying attention to right now as well. So if we pull out the trend line chart here, that line here, you can see we clearly have a trend line going downwards here, acting as a level of resistance. That's currently at around $41,525. this may be the reason as to why we do get rejected from that $41,240 level on the daily chart and do break to the downside. But this is definitely something to be keeping an eye on. Taking a look at all of the range, all of the time frames is really, really important right now. I do think we are at a crucial stage, and within the next couple of days we are going to be able to determine whether we're going to get a nice big bounce from this level of support or not. And if not, we'll be looking at those lower price points. But if we do, then we can start to see what levels of support we can build to create a strong point here. Now, in the last couple of weeks, if you really zoom out, we were having a really strong uptrend at the end of 2023. So if you take a look at this, from October to December, we were in a really strong uptrend. Now, since December, we have cooled off slightly. Yes, we had that big bounce, but overall, we've had a pretty steady price range within this price point here. So between $41,000 and $46,000. So that's a $5,000 price range compared to this one here between October and December. We've seen a 65% price range, so a difference between 26,000 to 44,000. So massive fluctuations there compared to what's going on here. And I think this sideways action is really important for the markets. When we're seeing this kind of sideways action where we're retesting levels of support, building levels of resistance, we are building strong key levels on the chart. And now, if the price of Bitcoin moves to the upside and we do start to have a little bit of a pullback, we will have key levels of support to be watching out for. The worst thing you can see in the markets is a straight line to the upside, because we have built no levels of support and no levels of resistance to use to help us in the future. And we want the price of Bitcoin to be strong and, yes, moving to the upside, but we want to make sure that it's building key levels along the way, and it's a strong price point that we can continue to look back at. So what we're saying here is we have key levels of support right now that we can be looking at, and we have been building key levels of resistance, and that's not a bad thing, because in the future we can use those levels, flip them as supports, and have them to rely on if we are seeing pullbacks. So all of this price movement is definitely healthy, and that is what we are aiming to see here. We are all in the markets for the long term. And when Bitcoin's seeing some sort of sideways action, when you zoom out, it's not a bad thing. We're building healthy price points that we can rely on in the future. Before we continue, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single weekday, so make sure to tune in to stay up to date on what's going on in crypto. Christian says, exciting times ahead. Glad I'm in CSE Plus to help guide me through all of this. Yes, please don't forget, I don't think I mentioned this enough on the live streams. If you are into cryptocurrency and you want to be part of the best cryptocurrency community out there, make sure to go to cryptosavingexpert.com. If you go to join CSE Plus here, you can join CSE Plus, where you get access to even more cryptocurrency courses, and you get access to our Discord group where you can talk with TMG, that Martini guy, and the rest of our community about what's going on in the markets, what we're watching out for. It's full of experienced traders that can help you and really build a community. When I first got into cryptocurrency, I was on my own trying to navigate what was going on in the space, essentially. And it's really difficult. You can often feel like you're a rabbit in the headlights, or you're drowning, because there's so much information and it's so hard to know where to get the information from. There's so many sources of information now, and it's coming from all directions. So we make Crypto Saving Expert because we have structured learning programs which just kind of eliminate all of that loud noise that's in the space. And we've made this Discord group where you can learn from other traders as well. So we do these live streams because I'm sat researching the news 24 hours a day, and then I can come and relay it all to you in a 1 hour period, so you can get all of that information, and then you can spend your time elsewhere. You can then go to the Discord group and you can see what narratives are running in the markets right now, what altcoins people are looking at, what trades people are making, how people are feeling about the markets, if they're super bullish or super bearish. And hearing different people's opinions really helps you make a more informed decision. You can hear somebody else's opinion and you can disagree with that opinion, but that just makes your position stronger. If you can hear other people's views and understand where you agree or disagree, you are going to become more and more experienced in the field very, very quickly. So just being part of communities, listening to live streams like this, and joining courses and taking part in a structured learning program is going to excel you in the cryptocurrency space. And being educated in this market is life-changing. It can be life-changing with the amount of money that is available in this market right now. So please make sure to like, subscribe, hit the bell notification button, and sign up to Crypto Saving Expert Plus so you do not miss out on the opportunities that are coming in cryptocurrency in 2024. Let's see what else is going on in the news here though, because we've analyzed Bitcoin right now, but I'm concerned slightly with what's going on with these spot Bitcoin ETFs. First of all, let's talk about the positives, and then let's move on to the more negative, what the more negative analysts have to say. So first of all, Bitcoin ETFs buy 95,000 Bitcoin as assets under management hit $4 billion. So growing investor appetite evident as newborn 9 Bitcoin ETFs accumulate $4 billion in assets under management. Now this is exactly what we all wanted to see. When these ETFs were being launched, a lot of people in cryptocurrency were very excited about what's to come because the possibilities are huge. We have retail investors, institutional investors, a huge amount of people now have easy access to the space, and a huge amount of money could hit the markets very quickly, we were all saying, and that is exactly what has happened. $4 billion has entered the markets thanks to these ETFs. So that is a massive, massive move here. Now, just to highlight the benefits of the spot Bitcoin ETF quickly, when you think of a bull market, we all know by now, if you've been in the cryptocurrency space during a bull market, your family, your friends all want to get into cryptocurrency as quickly as possible, and most of the time, they don't want to research it at all. They just want exposure to the price volatility. Now, by getting a centralized exchange, doing your KYC, and investing in Bitcoin is often seen pretty complex to somebody that doesn't know anything about the space. Now, I always try and make it as simple as possible for newbies in the space, but it's not always easy. And a lot of people already have a stocks and shares ISA, which they could just go log into and buy a spot Bitcoin ETF. So it kind of removes that level barrier to entry when it comes to new retail investors in the space by having ETFs in the markets. This is a really positive thing to come prior to a bull market. What we can also see is institutions are now getting exposure to the space, and the Bitcoin ETF issuers are promoting Bitcoin as an asset to invest into. And that is one of the key points here that I'm really pushing right now, because I think this is something that we all really need to consider heavily. BlackRock are now making adverts to say, look, maybe you should be investing in Bitcoin. This is not something that's going away right now. And all the other institutional investors, financial advisors are looking at BlackRock and Fidelity and VanEck and all of the other Bitcoin ETF issuers and saying, well, if they're investing into it, should we be investing into it? Questioning themselves. They've all kind of thought cryptocurrency was the Wild West for a long period of time, and now they're like, oh wait, they're getting involved, we need to get involved too. So there's a huge amount of money flowing into the markets right now thanks to these ETFs, and it's really positive to see this money flow in. Let's continue on that positive move. Grayscale now flips BlackRock as iBits records first discount to Bitcoin since launch. That didn't come out very well, did it? Grayscale tightens its NAV to 0.29%, while BlackRock trades at a discount of 0.3% for the first time. So what we're looking at here is the discrepancy between the amount of Bitcoin in the ETF and Bitcoin's price. So BlackRock shares Bitcoin Trust recorded its first discount to its net asset value on January the 19th, dropping to a discounted rate of 0.3% according to official BlackRock data. So these ETF funds will hold, for example, well, let's just say 100,000 Bitcoin, and then the value of their ETF, the actual stock value, may not be worth 100,000 Bitcoin exactly. There'll be fluctuations there, and this is what we're looking at here. And this will introduce also a huge amount of arbitrage traders who take advantage of these opportunities. If there's a 0.3% discrepancy between the value of the Bitcoin underlying assets and the ETF, people will buy into the ETF, wait for the discrepancy to go, and then sell again and take advantage of that opportunity over and over again, and vice versa. If they are invested into Bitcoin, and they see if they see the Bitcoin value in the ETF is lower than the value of the stock, they may sell the stock and choose to, the ETF, and choose to buy the underlying Bitcoin instead and take advantage of the price discrepancies. Now there are differences here because this ETF it's not the in-kind model. So there are two options when setting up an ETF. You can either have it so you can transfer between the ETF, the underlying and the underlying asset. So you can go from Bitcoin ETF to Bitcoin and from a Bitcoin to the Bitcoin ETF and swap directly. But these ETFs do not have that model. Instead, you need to use cash in the middle. So to go from holding Bitcoin to a Bitcoin ETF, you need to go from Bitcoin to cash to ETF and then backwards from Bitcoin ETF to cash to Bitcoin. So there's kind of that extra additional part in the loop there, and that means arbitrage trading is less appealing to many, and it means that it has been reported, it means we may see more discrepancies than we would have done had we had the other model. But anyway, what we can see here is BlackRock have said the above table and line graph represents information about the differences between the daily closing price for shares of the fund and the fund's net asset value. The closing prices are determined by the fund's listing exchange. Conversely, after a prolonged period at a heavy discount, Grayscale's NAV is now slightly tighter at just 0.27%, according to YCharts data. GBTC saw a staggering 48% discount to NAV on December the 22nd. However, as anticipation for its conversion to a spot Bitcoin ETF rose, the discount closed, reaching just 1.55% on the day it was converted. So we've all known about this for a while. Grayscale's GBTC, Grayscale Bitcoin Trust, was not an ETF. Last year, it was just a Bitcoin trust, a trust that held Bitcoin, and the discrepancy between the underlying assets in that fund and the value of the fund were very, very different. We were looking at a 44% discrepancy, and a huge amount of people were able to take advantage of that, which has been kind of pinpointed as the reason as to why the launch of these ETFs haven't been super bullish for the Bitcoin price right now, because some people are selling their GBTC. So let's talk about what's going on. I think we have an article on this actually. So here we go. This is the one. Let me have a sip of my water. Most people selling GBTC, so this is the Grayscale Bitcoin Trust, will invest into other ETFs according to Novogratz. So on Sunday, Mike Novogratz responded to an X post regarding the potential for a large-scale GBTC exit. This is the concerns that we've seen. What we've had in the last couple of weeks is GBTC was a Bitcoin trust from Grayscale. It's transitioned into a spot Bitcoin ETF. The discrepancy between the underlying assets in the fund and the value of the fund has come to almost zero. So what we've seen is a discrepancy of 44% in December, now hitting December 2022, I think that was, now hitting 1.5% discrepancy. That's a huge arbitrage trade that many people have taken advantage of and are now choosing to exit. Now, the reason these traders are choosing to exit is because they've had the arbitrage trade, they've taken advantage of it, and they've seen some nice profits. They want to take profit on their trades. And the other reason is, yes, they may still want to hold Bitcoin, they may still want to be invested in a spot Bitcoin ETF, but Grayscale have competitors in these spot Bitcoin ETFs have competitors in the market that are offering these services with lower fees. So just before all of these ETFs went live, we saw a huge number of these big companies saying, look, we're going to slash our fees, all competing to have the lowest fees before these ETFs went in the market, because there's demand there and people are going to invest in the ETF which has the lowest fee if they're all doing the same thing. If they're all spot Bitcoin ETF, you may as well choose the one with the lowest fees. So we've seen a huge amount of outflows when it comes to GBTC, with people taking profits and transferring into other ETFs. And that has caused a little bit of concern. So let's take a look at this. Terry, who is a chief architect at BTC Data, has said, looks like Bitcoin price will continue flat/down until GBTC is liquidated, $25 billion of selling over the next few weeks. The individual alluded to the decision to keep fees much higher than opposition ETFs could be the reason for the majority of outflows. So that's what I've just said. A lot of people are in profit when it comes to GBTC right now. They've been holding prior to these spot Bitcoin ETFs going live, and they're taking profits mainly as well due to the fact that GBTC's fees are much higher than its competitors. Now, while issuers began undercutting each other in the race for demand, Grayscale chose to keep the fee high at over 1%. Now, Terry has said, Grayscale's decision to keep ETF fees at 1.5% will go down as the biggest strategic error in crypto history. Greedy idiots. Now, I don't necessarily, I see where he's coming from here. Now, what's happened is GBTC have been trying to transition to a spot Bitcoin ETF for a very, very long time. They applied to the SEC to transition into an ETF over a year ago. They lost that application. They then filed a lawsuit against the SEC, the regulators in the US, and then they won that lawsuit. So it was deemed in courts that the reason as to why the US regulators, the SEC, rejected Grayscale's application to launch a spot Bitcoin ETF was not good enough. So they needed to either find another reason or let GBTC launch as a spot Bitcoin ETF. Now, we all know what happened there. In the end, the SEC opened the floodgates and let spot Bitcoin ETFs into the markets. And what we've seen here is Grayscale had that first mover advantage, and a first mover advantage in this market is really, really important. We've spoke about this quite a lot here on the channel. When it comes to these ETFs, the first ones in the markets are going to perform the best. Now, GBTC was a Bitcoin trust that was one of the best known Bitcoin trusts out there. It was really fighting for the growth of the cryptocurrency industry. It was really pushing to get spot Bitcoin ETFs, as I just said, entered that entire lawsuit against the regulators in the US, was not playing around and wanted to become a leading spot Bitcoin ETF product. But then they kind of fumbled the bag when they didn't lower those fees. Prior to the SEC accepting these ETFs, in the days running up to the launch, all of their competitors were lowering their fees because they knew they wanted a big slice of the pie. All of these funds are trying to get as much money under management as possible. Lowering their fees gives them a good edge compared to their competitors. Now, 9 of these ETFs were all going live on one day. Grayscale's Bitcoin Trust already held a huge amount of funds. They had the bag almost, and then they did not lower their fees. In comparison with their competitors, they did not become a competing product in many people's eyes, and they've lost a huge amount of funds in that fund because of this. So I do think this was a mistake on Grayscale's part. They had that opportunity to really. There was kind of a limitation on the first mover advantage because 9 were all going live at once. But Grayscale's Bitcoin Trust had a huge amount of funds under management initially, and they really could have ran with that. They really had that slight edge, but they've missed out on that, and a lot of people are selling their GBTC to transfer into other ETFs. So I do understand where Terry's coming from here. They've kind of lost on that advantage there. Let's see what else is going on here, though, because Novogratz has come back to this, and he said he disagrees with this. While I think people will sell GBTC, I think most will switch to other ETFs, BTCO being my favorite. So he's kind of saying the same thing. The fees are really what's the problem here. He's noted the ease for traditional investors to now accumulate Bitcoin and his thoughts on the price in the next 6 months. It's now going to be far easier for boomers to buy corn. This indigestion will end, and Bitcoin will be higher in 6 months, he predicted. So he's still feeling really positive here and saying, look, people selling GBTC will invest into other ETFs. I do think this is a real shame for Grayscale because they've been pushing and fighting for the space for so long. But if you can't compete with the fees of your competition, what gives you the leg up? Let's take a look at what's going on in the chat here. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. What's going on in the chat here? Jason Smith said, you said it perfectly, Jess. CSE Plus gives direction to the wealth of information available. Please make sure to check out Crypto Saving Expert Plus if you have not already. Good morning, James. Good morning, PG. You said, what Bitcoin ISAs do UK residents have access to presently? Personally, I would like to have some Bitcoin in a tax-free ISA other than just some in self-custody. This is a really good point here. I haven't actually looked at what ISA is best to do this with. These are US products right now. What's the UK FCA take on all these ETF? Where do UK investors, residents lie in relationship to putting in money? This is a really good question. To be honest, I was very much against investing in these spot Bitcoin ETFs for a very long time because I was thinking the transaction fees are going to be incredibly high. We come into this space for self-custody, not your keys, not your cryptocurrency. It kind of comes against what we're in cryptocurrency for. It's very centralized when we're here for decentralization, but there are some benefits when it comes to tax because obviously you get some tax relief when you go into ISAs. Looking at this specifically is not something I've done yet, but I will do this before tomorrow's stream because this is definitely something I'm paying close attention to now. If you can get tax relief, I'm going to write that down so I don't forget. Hopefully I remember what that name says. PG tax ETF. Am I going to remember what that means? Hopefully. What we've got here is a real opportunity here to try and get some tax-free ISA investments here. And also, I was saying in a stream the other day, we all come here for self-custody, as I've just said. Even Gary Gensler said it's ironic how centralized these ETFs are, yet how positive people in the cryptocurrency space are about these ETFs. And they do go against the nature of cryptocurrency, but there is some benefit to not having every single asset you own in self-custody. There are risks that come with self-custody that we are all aware of, that you need to understand you are taking on when you are using self-custody and being your own bank. And sometimes it may get to the point where we go, do you know what, we need to kind of diversify this risk a little bit and put it in other people's hands for a little bit. But let's see what else is going on in the news here. We are staying on the topic of these ETFs because we have seen BlackRock Spot Bitcoin ETF hit $1 billion assets under management in days. But we have, we're staying on with the positive news here. Hong Kong firm hopes to introduce Spot Bitcoin ETF in Q1 this year. So the race for other regions to launch ETFs is occurring. What else are we seeing here? This is the more negative news that we need to be discussing here. So another 12,865 Bitcoin has been sent to Coinbase by Grayscale. So a chunk of Grayscale's Bitcoin holdings was sent to Coinbase on Friday. According to data from Arkham Intelligence, Grayscale's transferred another $529 million worth of Bitcoin to Coinbase on Friday. The transfer comes after $2.2 billion was already sold from Grayscale's Bitcoin Trust, GBTC's now Spot Bitcoin ETF, their holdings in the first 5 days trading of the Spot ETF. So we all know by now, we've discussed this a lot in today's stream, Grayscale's Bitcoin Trust is seeing outflows now that its discrepancy between its underlying assets has closed and since its fees are much higher than its competitors. So with people exiting Grayscale's Bitcoin Trust, we are seeing Grayscale selling off some of their assets. We are looking at some analysts here saying, when will the bleeding stop? This is from an analyst. I don't know, but this is some serious daily outflows for the 9 to have to battle every single day. They've done a great job so far, but damn, it's a lot to ask. In his comments, he was relating to the other ETFs that are attempting to absorb GBTC's selling pressure. So far, BlackRock and Fidelity showcase assets under management of over $1 billion each for Bitcoin, with two others over $300 million. At the time of writing, Bitcoin was trading at $40,894. If we take a look at where it's trading now, we are looking at $40,785 here. Let's take a look at what else is going on in the news, because we've got one last article about these Spot Bitcoin ETFs, and it's again not much of a positive one. So let's take a look at this. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. What we've got here is many spot ETFs will fail, according to the Grayscale CEO. So he believes only 2 or 3 spot ETF products will be left on the market in the long run. Now, this is pretty bearish here. This isn't really the news we wanted to see this morning. According to a report from CNBC, this analyst has said his say on these spot ETF products and offered his opinion on the longevity of all 11 issuers. The CEO spoke to the news network at the World Economic Forum in Davos, Switzerland, and the Circle CEO and JP Morgan CEO were also in attendance at the event. So, I think from our standpoint, it may at times call its question theory long-term commitment to the asset class. I don't ultimately think that the marketplace will have ultimately these 11 spot products we find ourselves having. Based on the CEO's comments, it is apparent that he believes some may opt out of issuing the ETF down the line. A lack of volume and demand could be one reason for this. Grayscale has the highest fee out of all spot ETF products, issuers being going to war and undercutting each other on fees pre-ETF approval. And this analyst believes that only 2 or 3 will obtain some kind of critical mass, hence the reason for only a select few surviving. God, that was a real tongue twister there for some reason. So we are seeing BlackRock and Fidelity in the lead. Do I agree with this article? No. To be completely honest, no. Bitcoin is a very volatile asset. The amount of volume in this asset is continuing to increase, whether that's net positive or negative. The trading volumes in Bitcoin is high. Investors and institutional investors are looking to get exposure to Bitcoin through these assets. In the days prior to these ETFs being accepted by the SEC and these products launching, we were seeing funds changing their documentation so they could get exposure to the Bitcoin price. And this wasn't just saying, look, we are getting a little bit exposure. These funds it was somewhere between 15 and 50% for the majority of these funds. They were saying in their documentation, look, we're going to get 50% exposure to Bitcoin now, or we're going to get 15% of exposure to Bitcoin now, or somewhere in the middle. And that was going to be through Spot Bitcoin ETFs, Grayscale's Bitcoin Trust, and Bitcoin Futures ETFs as well. So we're seeing a load of funds that are registered as securities already making these these documentation changes and looking to invest in these assets for the long term. These assets have had a huge amount of volume inflowing into them within the last couple of days. I don't think this is just the hype of the launch of these ETFs. There's a lot of excitement around them, and if we do see this 2024 bull market that we are all hoping for, we all know what comes with that. With the bull market comes a lot of retail investors trying to get exposure and trying to invest as quickly as possible. I think they will be heading towards these ETFs rather than self-custody because it removes that barrier to entry, and it will continue to drive inflow and create volume for these ETFs. So I personally don't think they are going anywhere, but we'll see how this goes in the long term. It'll be interesting to see how this plays out as well. These companies, they're going to be fighting to get as much money in their funds as possible. So they're going to be advertising and marketing these funds as much as possible, really driving the adoption of Bitcoin here. So I think there's a lot to come here, and I think this is a pretty negative standpoint here, but we'll see how this plays out there. Now let's move on from those spot Bitcoin ETFs. Before we do, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single weekday, so make sure to tune in. We wrap up what's been going on in the crypto news. In just 1 hour, you will learn everything that I've been reading about in the last 24 hours. Every single day, it keeps you up to date with what's going on in crypto. And if you want to join our CSE Plus Discord channel, go to the cryptosavingexpert.com website, hit this big orange button at the top, and you can get access to CSE Plus with more cryptocurrency courses, the Discord channel where you can speak to that Martini guy and see what's going on and pick his brains, and you get access to a weekly AMA with him as well. And lots of other stuff is included in CSE Plus, but I think they're the main selling points there. Let's move on from that though. Let's take a look at what's been going on here in the news. So Bitcoin is at $40,798 right now. We'll analyze that again at the end of today's stream, but we've got some quick news stories to cover here. So Bitcoin mining hits 54.5% green energy usage. Bitcoin mining sustainability has hit an all-time high. This is exactly what we want to see going into a bull market. The one thing that people can use to bash us down the cryptocurrency space is the sustainability when it comes to Bitcoin. Bitcoin mining requires a huge amount of energy. It requires huge hardware machines. It requires those mining rigs I'm discussing, and it requires huge fans blasting these mining rigs to try and keep them cool. So there's a huge amount of energy that goes into Bitcoin mining, and the more competitive it gets, the more energy it needs, essentially, because these computers are just going to try and outcompete themselves. So they're going to get more and more technical, and they're trying to get faster and faster to try and outpace other mining rigs, and they're just going to demand more and more energy. So to see that we are using more green energy, it's hit 54.5% green energy usage is a really positive thing, and it gives the haters a little bit less to worry about. I'm sure they'll still come for us in crypto in the next bull market. Sustainability is a concern that there is a problem in the industry. I'm not dismissing it. It is definitely a problem in the industry, but a lot of people cling on to the sustainability issue as a reason as to why they will not touch Bitcoin. So if we can really change this, and we can continue to see the sustainability increase when it comes to Bitcoin mining, that's a really positive thing, because that's a really negative marketing problem that we have there. People don't want to get involved as the sustainability as a problem. So seeing this improve is, I think, is really important, not just for the marketing and the amount of people we can get into cryptocurrency, but for the planet as well. Let's take a look at what else is going on in the cryptocurrency space here. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. We've got layer 2s take the hit as the market slumps. So Ethereum layer 2s have been among the biggest losers in a market-wide sell-off here. For example, we have seen Matic, OP, and Arbitrum. That was my words are not wording today. We've got Arbitrum there as well. Let's take a look at the amount of losses we've seen in the markets right now. So Optimism has lost the most value, down 26.77% in the last 7 days. Arbitrum is down 23.7% within the last week, and we've got Matic down the least out of the trio, but down 16.54% in the last week as well. So we are seeing drops here to be aware of when it comes to the altcoins. I mean, this is looking pretty tasty. When we look at the markets and we see the markets are moving to the downside, this is when I start to feel greedy. I like to swap when you're feeling greedy and when you're feeling fearful. When the markets are red, you should feel greedy, and when the markets are green, you should feel fearful, not the other way around. When you first get into the markets, it's the other way around. And you have to teach yourself to think of it in reverse. When there's a buy opportunity, when there's a dip of a size like this, that's where the opportunity is, and that's what I like to take advantage of. Is this the bottom of the dip? I don't know. That's why I dollar cost average. Let's take a look at what else is going on in the news here, and then we'll take a look at the price of Bitcoin and analyze that quickly. What we can see here is MetaMask is now allows users to run an Ethereum validator. The feature provides a simpler method to become a validator, but has a catch. So let's take a look at this. MetaMask posted on Twitter on Thursday stating that users could now stake the 32 ETH required to run a validator node and reap the benefits. Let's take a look. What is the catch here? Alongside the simple method, MetaMask will take a 10% cut for the in-house feature. That's a pretty high percent there. The MetaMask service will be run by consensus, which prides itself on never being subject to slashing penalties. It stated it has never received any slashing penalties in more than 2 years of operation, despite managing over $2 billion worth of ETH across more than 33,000 validators. So slashing is when you act maliciously or you do something wrong on the blockchain and your Ethereum basically gets taken and burnt because you're not acting responsibly as a node, validating transactions and putting them onto the network. So you are going to see the repercussions for that. When you are staking Ethereum, you're earning rewards every time you help validate a block and put that on the blockchain. But not everybody can do that. If you are a malicious actor, if you are not acting as you should in the market, you'll get penalized. You will lose some of your Ethereum. So there's that little bit of risk there, but consensus are looking and saying, look, we've never acted malicious. We've never done anything wrong. We've never had any of our Ethereum slashed, which is exactly what you want to see because you don't want to be staking with a staking provider who gets slashed all the time. So this is a brilliant selling point there from consensus. But what we're seeing here is at the time of writing, users can gain 3.8% annually staked Ethereum, but with the MetaMask 10% fee, this comes down to 3.42%. Liquid staking has an annual interest rate of 3.5%, putting the two in tough competition. So it is close here, but that's a big fee there, 10% for MetaMask. They'll be making an absolute fortune if this gets heavily adopted there. Let's see what else is going on in the markets here today. Please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. Trader pays 141 Ethereum bribe to secure $6.7 million profit on the SavM launch. So, a crypto trader used a crypto sniper tool to secure an almost $7 million profit within 3 hours of the launch of Satoshi VM token. Within 3 hours of the Satoshi VM token launch, a crypto trader netted a profit of $6.77 million by trading the token immediately upon its launch. The trader used the banana gun sniping tool, allowing them to swiftly acquire the token, thus capitalizing on the subsequent price surge, ultimately allowing them to amass nearly $7 million in gains. So, how did they do this? To initiate the process, the trader utilized the banana gun trading bot to purchase 2.61 million Satoshi VM tokens for 277 Ethereum. So, they were a big whale to begin with. Equivalent to $681,000. They put $681,000 into this newly launched altcoin. In order to initiate the transaction, the trader had to pay a 141 Ethereum bribe to be the first to acquire Satoshi VM upon opening, which allowed them to secure over 2.5 million tokens. The trader then sold 2.16 million tokens for $4.38 million, while still retaining 450 Satoshi VM tokens, valued at approximately $300, resulting in an impressive total profit of around $7 million. So that is an absolutely insane profit there. It's crazy to see what's going on in the markets right now. I was meant to be sharing the link to you. If you want to learn more about the banana gun bot, I will drop the link there in the chat and how this trader has actually managed to do this. It's absolutely insane here. So it's a Telegram bot which allows users to facilitate trades through a Telegram interface. Absolutely insane amount of profits there. Let's take a look at what else is going on here. Terraform Labs files for Chapter 11 bankruptcy in District of Delaware. So Terraform Labs has filed for Chapter 11 bankruptcy protection, a form of bankruptcy which allows companies to stay operational but will restructure their obligations. We're all very familiar with Chapter 11 bankruptcies. If we were in the space in 2022, it was full of them. Let's take a look at what's going on here. What else is going on in the markets? China's underground crypto market thrives despite harsh trading ban. So we have seen trading cryptocurrency being banned in China for a very long time now, but what we're seeing here is Chinese crypto traders float ban through VPNs, social media, and meetups, maintaining an $86 billion underground market. So absolutely insane volumes there still in China. Let's take a look at what's going on with Bitcoin's price here. Let's see what's going on in the markets. Presumably, there are losers on the other side of those trades. Do you think this sort of thing is good for industry? In terms of this kind of thing, no, I don't think this is good for the industry. But let's take a look at what's going on when it comes to Bitcoin on the daily chart. If we take a look here, as I said, we've got a major level of support at $41,240. We have not yet broken this level of support. Yes, we are trading below it, but we've not yet seen a candle close below it. So I'm not classing this support as broken until the daily candle closes. So when we close this evening, if we are below that $41,000 level, we'll know for sure that support is out, and we need to be looking at the next ones here. We have a CME gap, which is currently out at $39,600 level, acting like a magnet for the Bitcoin price. We may just wick it, or we may trend to the downside throughout this week. In terms of levels of support, a key level I'm looking at is $37,840. For those of you that weren't here at the start of today's stream, I will recap what's really going on in the markets right now. So I personally believe we are in a bull market. They come every 4 years. For us to be in a bull market now fits in with that cycle nicely. We have the Bitcoin halving in April 17th, it's looking at the moment. So everything is lining up to be in a bull market right now. In a bull market, we do see pullbacks of between 20 and 30% every couple of months. So I do think that we are at a reasonable point right now, and what's happening with Bitcoin now fits in with the typical trends that we see in the 4-year cycles. Now, if we take a look at the high we've just seen following those Etfs launch to where we are now, we are down around 17% in the market. So Bitcoin still has room to move to the downside and still be within the traditional kind of typical trading patterns for Bitcoin. If we were to move down to that CME gap, 19%, that would fit in with the trend. If we were to move down to that $37,840 level, that would fit in with the trend. Anywhere between 20 and 30% is a typical pullback for Bitcoin in a bull market. So at these price points, I'm not concerned. Now, a lot of people are shouting for the lower 30,000s range as a price point for Bitcoin. Now, as I've discussed at the start of this stream, there is a major level of support here at $31,426. If you take a look at what's happened through 2023, you can see the significance of this range. And if you were watching these streams at that point in time, back in May and July, we were saying about how crucial this point was because of how it was used in the previous cycle as well. So this is a really crucial level here at $31,500. But will we get back down to touch it? Now that's at 36% pullback from the high we've seen this year. Now that is very much on the higher range of the typical pullback range that we see in a bull market. As I said, we're looking at 20 to 30% pullbacks. 36 is a little bit too high there. This puts it as pretty unlikely on my scale, but I do still think it is possible, but it's kind of like 10% possibility for me right now. I think looking here is possible. I think it's much more likely, but there is still the possibility that this level of support holds. This is something I'd like to be aware of. We've not yet broken this level of support. I mean, if we come down here, it'll be a nice dollar cost average opportunity. Will it happen? We're not certain. So I always like to dollar cost average in. This is always my strategy. Dollar cost average in, dollar cost average out. Try and buy the dip more heavily if we are in a dip, and just continue with that strategy because I'm bullish on Bitcoin for the long term, bullish on this for 2024. So getting in and getting these opportunities is brilliant. If we do come down to that $31,500 level, and use it as a support once again, that would be brilliant. But if we don't, I wouldn't be too shocked, to be honest. If we come down and we shoot down below it, that's when I'd be confused. Then Bitcoin wouldn't be following its normal trends, and that would, I think that would take some sort of black swan event for us to get that low. So these are really the points that I'm looking at up here, but this is still a small possibility that we can all be aware of, because I have seen a lot of people shouting for like lower prices on social media. Now, in the off chance that we do hold this level of support that we are currently facing at $41,250, we do have a level of resistance. If we join in at the 1 hour chart, you can see we've used this as a level of resistance a couple of times now. This is currently trading at $41,550. This is making me feel like it's quite unlikely that we will hold this level of support on the daily chart, but it is still possible. So let's keep an eye on this within the next couple of days. If we close below this today, then we can start looking at those lower price levels for tomorrow's stream. If we close above it, then we need to keep an eye on that level of resistance on the 1 hour chart. And if we manage to just shoot to the upside, I'm looking at that $44,210 level of resistance. But to me right now, it's looking pretty unlikely. But that's all for today's stream. I just wanted to quickly recap what we were saying at the start of today's stream when it came to Bitcoin's price. But that is all we've got for the cryptocurrency news. We've analyzed the price of Bitcoin. Let's quickly take a look at what's going on with Ethereum versus Bitcoin here. So Ethereum has been outperformed by Bitcoin within the last 24 hours. We discussed this at the start of today's stream. Ethereum is down 5.9% within the last week, when Bitcoin is only down 4.16% within the last week. So Bitcoin has been outperforming Ethereum. Let's take a look at this, because this is a really important chart. When this chart really starts to boom, this is when we are seeing altcoins absolutely explode. Now, right now, Ethereum is being rejected by that level of resistance, which we've had since back in September 2022. So until we break up above this, I'm being a little bit cautious. A lot of you know on the stream right now, I am definitely a big Bitcoin holder in terms of percentages. Huge percentage of my portfolio is Bitcoin. I want to diversify, and I'm looking at this point in time within the next couple of months to really make those changes. But I'm a bit cautious because of this sharp move to the upside without that breakthrough, trying to choose when is best to make those changes. Let's take a look at Bitcoin dominance as well, because this is important at this point in time in the market. So if we take a look at Bitcoin dominance right now, typically after a Bitcoin halving, this falls off a cliff, because that's when a Bitcoin bull market rises. You can see this is the Bitcoin bull market in 2021. Bitcoin dominance fell off a cliff. Right now, Bitcoin dominance is kind of having a little bit of a bounce, looking a little bit strong. When this starts to drop, that's when we know we're in for the ride. The 100x altcoins are going to be shouted on social media every single minute of every single day as soon as that Bitcoin dominance starts to drop. So be prepared for that. There's lots of things coming in this market right now. The markets look like they're gearing up for some big changes here, and the timing is all fitting in perfectly with these ETFs and with the halving around the corner. So I think 2024 is going to be an exciting one. But that's all we really have for today's stream. So thank you very much for tuning in as always. I hope you have enjoyed. Please don't forget to like, subscribe, hit the bell notification button, comment below today's stream, comment in the live chat, interact as much as possible, share the stream with your friends. It all helps the channel grow. But that's all for today. Thank you very much for watching.